Hi, this is Randy Finney with Right Side of the Chart. This is a early session update for Friday, February 17th, 2023. It is 11:40 a.m. Eastern Time. So I'm starting the video. Just want to get a quick one out to you. A couple things I'm watching today. And first is the markets here just reversed NQ, the Nasdaq 100 futures from short to long right here. That's a pretty good support level 12,226.50-ish. Right there, you can see this previous reaction low and this previous reaction high right there, and that's where we're at. So PPO is still poised to make a bullish cross, and we are at, again, my extreme number. I don't use the default 30/70 settings on the RSI. I like to look at each security, in this case the Nasdaq 100 futures on the hourly chart, 60-minute candles, and this is where really it seems to get overbought at about 87.80. Right there is where the extreme overbought readings are, and then the extreme oversold are right about where we are here, about 22.60 right there. Last time we were there was right there. Time before that was right here. Again, I'm not sure if I got this one out to you this morning or something similar. I know I circled on the futures. So that's it. Now, keep this in mind. That is, it's one thing to recognize where a security tends to become overbought or oversold and get those trend reversals very near term. After correction, you step in and buy those levels. That was also in a strong uptrend. In case back here, I was making the case to be long and for a trend reversal that we had gone down, down, down. That was the lows. We put in the spacing pattern, then we broke out. So we were long and strong through the bulk of this uptrend. The takeaway is, that's what you want to get in a bull trend. But in a bear trend, oversold tends to become either more oversold, you go deeper below those levels that you get to in a bull trend, or you stay oversold for an extended period of time. With that being said, I think it's good enough for a quick bounce trade, and possibly more if that whole marginal new high scenario comes, which again, if it's I just want to be clear, if it's wishy-washy to anybody out there, I don't consider it such, because it's only, like I said, max about 3% above the previous high. And so all intents and purposes, it'll just be a topping pattern here. Now, this very well may be the top. So, swing positions, I think the case has been made repeatedly and still is to be short here, just not an all-in moment just yet. However, if we take this level out with conviction, I'm going to go over a few others to watch. We could be going lower, and this oversold can become more oversold or stay oversold for a period of time. And the PPO crossover, we could have a rejection. So far, it looked like the lines wanted to cross. They tried to turn up, you can see there, but they didn't quite make it so far. That's what I talked about this morning, a potential rejection. So that's the NQ, and I wouldn't, like additional evidence to make a case to cover shorts and make a long trade bounce, and that's the ES right here. I got this chart out to you as well this morning. That's pretty good, not great, but pretty decent support right here. You had a reaction high there. I just boxed in a reaction low, and that's where we're at now. But that does come on the heels of this breakdown of this trend line, and also on the heels of that divergent high right there. And so I think it's worth that tradable bounce. I think it's, for an active trader. Again, define your trading style. I'm speaking right now, putting on my day trade hat, active trading hat. I continue to maintain that I think the RR, risk reward, is more conducive to swing or trend short positions at this point. And again, not a hard all-in moment. We may continue to grind around for quite a while, but I still maintain the upside is relatively limited. Again, relative is when I say relative, I'm speaking to the time frame we're talking about. For a day trader, if you take a heavy position, a bunch of NQ contracts, you won't want to ride out a move that's going to take out possibly 2-3%, 1-2-3% above that recent high right here. But on a swing or trend trader, absolutely, you could scale in. The takeaway from this right now is, whatever you do, you don't short here. If anything, you cover shorts and or go long for a bounce, because it's trading 101. You buy pullbacks to support, or you cover your shorts, or you wait for a break of that support to then add to or initiate a short position, or sell out of your longs if that's it. And then ultimately, again, bounce Tradable bounce or not first. I think we're coming at least to that uptrend line right there that I just extended. And very near term, I'm giving you that micro. And that's what I think I had this morning. Showed you a bounce up to 4,100. In fact, the S&P, that's the thing. I was waiting. They just, I just got filled at, let me see what my fill was. On my NQs, so I've got to flip accounts here. Had an order in at 16, 12, 12,275. That's where it was. I was looking at a trade blotter with 2 days of trades. It took a while to go through them all. Back to that. So I just wanted to point out that the S&P is at support. That's ES, S&P 500 futures. I'll get to the index ETFs in a second. There's the RTY, the small caps, also reverse those there. There's a trend line we're at this morning. We continue to hold, so we're at trend line support there. So that's not one, but two index, well, three really, including the NASDAQ 100, and the three big ones that I watch and or trade. And there's the that level. Oh, I wanted to show you on a 15-minute chart. So this is threading the needle. That's where I had my reverse order placed right above there, because you can see it right here. 12,270, 63 is what it says there, but that was right there. That was that support from that previous one, and there was also a reaction high to the left there, and you have this positive divergence. So these are the things I like to see to at least cover shorts and or to go long for a bounce trade. And where to? Probably this uptrend line right here. I think that's very reasonable, and there's some price resistance there as well, somewhere in there. So just looking for a quick bounce trade with the divergences. It could play out for more in that 60-minute. If this plays out, by the way, you're going to get that bullish crossover on the 60-minute PPO that I started out with. So there's potential for more, and if you think so, you took it. If you take it now, I'm doing the video, we're still right there. We're right on that level. You take a long with a stop somewhat below as an active trader. There's a reaction low there. You might want to let them spike down to. It's up to you how much upside you're looking at. The less shorter bounce you're looking for, the tighter stops you need to take. It's that easy. If you're looking for, let's say that scenario of a marginal new high that could be 1, 2, 3% above the previous high, way up here off the screen, then yeah, you can allow for a wider stop for that. It's all about your risk-reward ratio. All right, so that's it. Looking for a little bounce here, and then I showed you the RTY, the small caps. I showed you here's QQQ on the 60-minute chart, and this is why I watch both. I was looking at the first of the support level I just showed you on NQ, NASDAQ 100, or this 297.60 on QQQ, and we made a perfect tag of it on the NQ, and that's where the buyers, like me, and NQ trader primarily, stepped in, and QQQ traders might have been. And this is why I always say, if first of all, watch multiple indexes, and it's often the first. You want to be safe. You want to cover or take your position, your long position on the first tag, because the others might, if the buyers, like they did so far, we're not very far off that level on NQ, stepped in, then they may reverse, which they've done just a hair early on QQQ. But again, for all intents and purposes, that's close enough. And then where do we go from here? Like I said, kind of leaning towards a near-term bounce scenario, open the possibility more. There's a gap to be tested, today's gap. If you zoom in real tight, this is a 60-minute chart, but you can see that yellow line right here, that was yesterday's close. This was today's open, so there's your gap right there. Maybe they want to test the bottom of the gap, maybe a gap backfill, and it gets also pretty good resistance there at about 302.93 that I covered yesterday. And that would be a minimum target there if we, again, assuming we do bounce. Let me give you a couple other things to look at here. A lot of these charts I got out to you this morning, the daily charts that show you we've taken out. We have finally been talking about it for a while, but also talking about in the fact that it didn't happen yet up until yesterday. We finally got the bearish crossover on the PPO. That's, you can see yesterday, that red bar. That means at the close you finalized the crossover, and today we're down even more below it. And again, this has just been a pretty dang good indicator over time. When you go from these green hills and you get the crossovers, that one happened right there. And yeah, was it the end or the beginning? No, we had a little kickback rally, but in percentage terms, that was a fraction of a percent, or I'll tell you how much it was. It was 2.5%, not much. And then you also, like I said, always take these in conjunction with other things. You had a trading range there, and there was a breakdown below the trading range, and that gave you that trend. And there was a bullish crossover right there that got you long, or helped to confirm again. We were looking at this trading range right here, and break out of that. I even mentioned going, covering all my shorts, and I'd already taken long hedges, and then I was raw, pure long, unhedged, out of there. And again, so there's multiple things. The bullish and bearish PPO crossovers are just one, but they help confirm other things. And so that's it. Just want to make mention. It's pretty good. It's, if you look at, there are some whipsaws. Nothing's perfect, but if you just look at these hills, the green and the red hills, and look at the trends that they've captured. I know I've gone over this many, many times, but there's always new folks coming in and people catching up. That was a bull trend. That was a bear trend. And you can see the histogram told you, pretty much when to be long, when to be short. It's not perfect, but in conjunction, when used in conjunction with other things, trendline breaks, divergences, moving averages, price resistance, Fibonacci's, all that other good stuff, and it just says, hey, this could be the start of a much larger trend down. It's either going to be that, or it's either going to be that or a whipsaw, and time will tell. So, learned over time, start to, either take them on faith or give it a little bit of, like I said, where it would be to me a more aggressive all-in moment if a couple things had happened. Number one, if we had a divergent high here, which we could still get on the daily time frame. I love those divergent highs. They're not an absolute necessity to mark a top, but they're a pretty darn good one to indicate a trend reversal. But with that being said, you don't always get them in bear markets, especially. And the other thing is you have just a confluence of support down below. And so, down here is where it'll make sense to be more aggressively short. Most likely, depending on how the charts look, how the charts of the indexes look, how the charts of the market leading stocks look, everything else. All right, so the only other one, SPY, just wanted to make a mention. S&P 500, if my lines load here, sometimes lately you got to kickstart them, drawing a line, and there they go. So this is all stuff I get out to you this morning. I'm going to get to gold and silver here in just a second for you. But there was that breakdown yesterday, was the breakdown candle right there. Not by a large margin, although this line drifted as I just pulled it in. There you go. It was a breakdown and now follow through today. So that's a pretty good sell signal coupled with that divergence. So again, let me say it one more time. Swing and trend traders, again, the risk reward favors being short and versus being long at this time, because like I said, and I may be wrong, but my most optimistic scenario, and I'm leaning a little less towards that now with these bearish crossovers. This morning I said roughly 50-50, probably a little less than that, would be that spike to a marginal new high, and again, it's just not enough upside. It's 4% or so from where we're at now, and only a couple percentage points from that recent high. All right, then you of course have the big trend line here, and this is a good place to cover. The buyers are probably going to step in. You have a confluence of support, the 200-day moving averages, the uptrend line, everything. So a little more downside left on the S&P before you probably get the first decent tradable bounce. Again, we may or may not get one off that level on NQ I showed you today. That's the thing about a market reversal. I'm just point one more thing out. This is the nature of this of a bear market, and this bear market in particular, is that these things are quite often full throttle up. They don't let the shorts out when they rally. They don't let the longs in until this is where the longs want to buy. This is where the vast majority on the media start to get bullish and call the bear market over, a new bull market, and that's where you see a lot of buyers, and then boom. And then what happens is the market doesn't let those late coming longs out. They think it's a dip. They buy more. They keep buying the dip, and then they realize they're wrong, and they start to get stopped out here. The shorts were second guessing themselves. The bears, they didn't short there, and then they want to short here. Again, I'm speaking of collectively, not everybody, but just the masses, how it works. And there are periods of consolidation, but again, quite often it's full throttle up, full throttle down, and doesn't give a lot of time, a lot of opportunities for those on the wrong side of the trade, meaning longs right here or shorts right here, to get out. It just So again, just look at the inflection points, and quite often they're pretty quick turns. And so with the PPOs firing, the crossovers, those overbought signals, it could be a pretty quick move, and we could just very well see the possibility we'd smash right on through the 200 days and the uptrend lines and all those other levels there. Remember, we already took out the uptrend line on QQQ. All right, so that's where those are levels to watch and ways to trade it. Like I said, swing trend traders, maybe just continue to average in, build into short positions, especially strategically on breaks of support and things like that, or rallies into resistance. Okay, next up, I want to show you gold and silver real quick. Yesterday I mentioned that they're starting to build divergences, and we're much closer, I think, to the end of the correction, if it's not already over. And then the top, we were able to sidestep, at least I was, looking at, this is silver right here. That was at key level there. We broke down, so we sidestepped this correction so far. There's still the potential, I can see easily going down to here, although we may not get there. The thing about silver and gold, they're in a bull market, and so you don't try to shoot for the moon and the stars on short pullback trades. In a bear market, yeah, your short trades are going to play out more, have more downside, but in bulk, when you're trading, if you believe a correction within an ongoing bull market, you might want to be best to cover early and start to get back into those long positions early. One thing to do here is it's not huge, but it's a little channel, almost a wedge pattern right there, and it comes in again. Today's lows was right off that support of about $21 right there in silver, so limited downside to the trend line. And you can see here, and I'm on a 2-hour candlestick chart, 6 months of price history, 2-hour candles. You have some positive divergence. Let me step it down. I should have started with gold. In fact, I meant to. I clicked on silver, so I'm just going to finish up there. This is my 60-minute chart, hourly candles, 3 months, and there's that same, pointed out yesterday, bullish falling wedge pattern, complete with positive divergence into today's lows. I just take these lines that we had from yesterday and I just extend them. So this is what I like to see, especially in a bull market after correction. I really like to see on the 60-minute time frame positive divergences to start getting out of if any of the last shorts that I have, and start going in taking longs. And what you can see here is a breakout right there of the wedge, back test 1, back test 2 right at the apex, starting to move up. I think what'll get silver going, I'm going to drag this line right here, 21.78, so we'll call that, 21, let me move it up just a hair, 21.79, or you want to round it up, 21.80, some minor resistance that should pop us and get us going there. I could certainly add another line here, but and I'll do that for you just so you see where I can see the potential reactions and resistance levels that we need to pop to open the door to the next one up. And so that's it. So silver's looking good for a long trade right now. Long, you can certainly make a case. I did. And gold is GC. Where you at? Where's my gold chart? Here it is. Same thing. This is a 2-hour candlestick chart, because I just want to zoom out to 6 months, show you the uptrend line in gold right there. That gave us our sell signal. We broke it. We had minor support there. Had one little whipsaw I pointed out at the time, and then that gave up the ghost when it took out that 1914-ish support. Impulsive move down. Little flagging action, broke down from there, moved down, but now we've come pretty much full circle. Though I would love to see it at a better support level. It's really kind of in no man's land. That means between the next decent support and resistance, but 1850, 150 is resistance, and it's also the top of the wedge. So if we can pop that, then gold looks like it could rally. Yeah, I don't want to force a support level here because I really don't see one on this time frame. Going down to the hourly chart, here's that divergence line. I haven't even updated it in a while. I'll show you. This is how divergence is not a buy signal, but it's a condition that shows you momentum is waning and a trend change is likely, and that's what we have here. So if you take that, you can can draw it like that right there. That's that same wedge I just showed you on the 2-hour candlesticks. These are 60-minute candles, and there it is. There's that price resistance right there, and the wedge. So if it pops that, we could run. I might have to modify it, which I can tell you. Well, we'll just leave these lines here and just see if you decide to take it. And of course, as I like to say, any analysis on gold and silver is incomplete in my opinion without looking at the dollar and the euro. So we'll look at the euro-US dollar pair. One of the reasons we got out of our shorts, our GDX and gold mining stock longs and the metals themselves, the euro was in this bearish rising wedge, the euro-US dollar pair. When this is going down, gold goes down as well, because it's the euro against the dollar. The euro and gold have a positive correlation. They move together. And the gold and the dollar have an inverse correlation. One goes up, the other goes down. So this is the euro. We're looking at a positive correlation. So this is when we want to be long and strong gold, silver, the mining stocks. And then when you have a correction, which I believe this is just a correction and a larger bull market in the euro, bear market in the dollar, and give you these targets all along. 106 has been hit. That's that target right there. I've had this line here for a while. And then my final target was and still is this trend line. So that's why I'm a little bit, did we get a little fake out here? Did we go down? Maybe it doesn't get hit, but I'm still leaning that way. And that's why it's not an all-in moment right now for gold and silver, at least a counter trend rally. So let me go back to those charts. Here, I'll use for you ETF traders, I'll use a 60-minute chart and show you what kind of long lines, what I'm thinking. So we could get these divergences to play out or start to play out, or we could also see this. The divergences could extend, meaning we continue lower, and then I just pull these lines down, and that's when the euro US dollar hits that trend line support, that final target that I've had. Or we go ahead and break out and have a counter trend rally first and then go down, and that's what I'm looking at, leaning towards too. Let me pull this line down here for you right there. So there would be a bounce target in silver, SLV, the ETF about 2097, and then there's also some resistance up here as well, resistance zone. GLD, I mean, silver's gonna follow gold for the most part. Sometimes it'll do its own thing for a little bit, but for the most part it's just going to follow gold. And you can see on gold you have the nice positive divergence on the 60-minute time frame, and here's a trend line we'd probably back test. So this would be a potential bounce target up here, somewhere about 1740 to the trend line. Give you a little counter trend rally, 3.5%. Remember, to be bullish gold, it's typically to be bullish the miners, except the miners just move more in percentage terms. So GDX, hopefully, was able to save some of you some losses on the long positions that have been bullish and long the miners for a while, but saw this correction coming, that bearish rising wedge break down there, and then we moved lower, hit my second and final target. Now I had these potential targets. I'm just not holding out for that much. Like I told you guys, I think it was worth it even a little bit above T2 in my opinion. That's where I covered just to get out. But we may bounce here in the miners, and will if the metals bounce. And so that's why I started there. There's a downtrend line. We could work our way lower. Like I said, these are buy points if GDX gets there. I will do a comprehensive video, especially if I get the feedback on it that some of you like to trade the individual miners, because that's where I really get, when I get my confidence, high degree confidence in going long or short GDX is when all the miners, the big ones, Newmont, Franco, Nevada, all these, big top components of GDX, when they all hit support at the same time, or they all have, they all break out of a resistance level and they have divergences. And, if you can make a strong case to buy the big miners, then you can, of course, that's what GDX is made of. I'm on the 60-minute time frame here, and so there's the positive divergence, just like the metals have, pretty much back to about right there for the most part. And there's a downtrend line. So need to pop that, and we could have a little counter trend rally in the metals and miners here, and silver and gold and palladium I laid out to you yesterday as well. And again, and I think I already did this. I was on the daily, but here's the 60-minute chart of the euro US dollar, and this is another reason I took some metals today. Little minor downtrend line, nice positive divergence. This is a 60-minute time frame. So that says even if we are going to that primary larger uptrend line on the daily I gave you earlier, right here, this uptrend line, you know, nothing goes straight down, or few things do. Natural gas has been doing that lately. I'll do an update in another video. I'm going to wrap this one up here, but you can see this is a level. I'm going to put a potential bounce up here, and so if we get this, and I don't see why we wouldn't. That's nice divergent low. If we can get a little upside in the euro near term, which means a pullback in the dollar, that should give us a pop in gold, silver, GDX, and maybe get out, you know, take the quick pop, make your whatever it is 5-8% on GDX, you know, 3-5% on gold futures, or a little bit more on silver, and maybe at that point book some profits and look to recycle back in, especially if we have one more leg down. So those are the ideas I wanted to focus on today. Get that out to you. Tell you the markets are still, you know, I still think we'll probably get a little bounce off this level, 12,270. Give you the targets on NQ earlier. Showed you not only NQ, NASDAQ 100 at support, but also ES, the S&P 500, although below trendline support, but at price support there. And then this is a longer term potential target, that trend line right here. Let's make it nice and thick so it stands out. And so it's just a matter of if we get there and then how we get there. I like to, as an active trader, try to figure out the little, what I call micro squiggles, and trade those like that. And again, I think I said it this morning, max bounce target right now would be that. If we pop that, we're probably going to go on to that marginal new high scenario. So just keep that in mind with your, you know, stops and positioning and all that. Okay, let me get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.